G'day and welcome to this week's video. My name is Robert Gowdy from Consortium Private Wealth, and this week we're going to have a look at the third quarter earnings report from Apple. It's not a stock I've covered off terribly much in the past. Obviously there's a lot written about this business, but this video has come about given that one of my clients asked the question, what's my thoughts on the share split? So they have announced for everyone you're going to get an extra 3 shares, and what's the outcome, what does that mean, and what were my thoughts. So I'll cover that off in the end, but just out of interest, let's go through and have a look at some of the financials, some of the growth of their business products. And I've been a long-term Apple user for many years, and what intrigues me about these businesses is that once you get there and you buy yourself a phone, and then you buy yourself the AirPods that go with it, which being a runner, they are unbelievably good. And of course, then people grab the watch as well, which I obviously don't have, but lots of people, everything just seems to seamlessly work together. And that's the cleverness of their products and services. So once you're there, you're sort of locked in a bit. I know some people don't like that, but for me, if it works and I don't have any problems with it, there's just no reason to leave, and I don't mind being locked in to the one platform. So let's jump in and have a look at the earnings. So obviously earnings not far off $60 billion for the quarter, which is 11% up on the previous year, and profit is up well over $1 billion from a year prior as well at 11.25 billion. On the news, it might have been a bit after our trade, the market was up 10.5% on the news. So there may well be a bit of a bump for the quarter, given that people are learning and working from home, as we've just started to go through a process of stage 3 in rural Victoria, as things have got a lot uglier here in terms of new cases for COVID in Victoria. And the market cap is now worth 1.842 trillion. So a huge number. And I still remember when these businesses break through the trillion figure, there's just that thought that people say there must be a ceiling to how big these businesses can get. And that's the beauty of these internet-based businesses. Well, it's a bit of hardware too, but it relates back to services and products that we get through these devices. So the music, the movies, obviously the TV component, TV Plus, these are ongoing revenue streams. So highly scalable. Once you've got the bit of hardware, whether that's an Apple TV device, iPad, Mac, phone, whatever it is, you then can be a paying subscriber for storage, for movies and so on. So it's the increase in those services and what we consume through the device that locks us in. And where I've bought, or my family has bought music or movies in the past, it's highly unlikely we're going to move, given we've got a library of content that we've paid for. So the market cap at the moment, 1.84, that one night's trade probably jumped about 160 or 70 billion in one night's trade. So incredible numbers, huge numbers. The services and wearables business, I think that was quite impressive. That's talking about the watch and also the AirPods, those types of things, up 16%. When we're looking at the Mac and iPads, they've probably been laggers in the past, given that we can do so much through this device. They've jumped 21 and 31% year on year. So they're huge jumps, and it just shows the uptake of people getting the devices they need to work from home. And again, still plenty of iPhone sales in terms of revenue, and obviously the services, and that's all those things we spoke about, up 15%. So still jumping and forming a very big part of this business. And what impresses me as much as anything that you can see here, the first bullet point I've got there is the paying subscribers on the platform in general is up from 515 million to 550. So that is a huge number. So let's go and have a look at the stock split itself. So 4-for-1 split, and the reason they're doing that is to make it more accessible to broader base investors. So essentially bringing the share price down. So for some it may appear cheaper than $400. It'll be, say, $100. So each Apple shareholder will get an additional 3 shares on top of the one they've already got, and that'll bring the share price down from, say, 400 down to 100. So for some that'll seem cheaper, but for me, stock splits don't mean a huge amount. It's still the same size company. There's just more shares on issue. So for me, it just doesn't matter. It doesn't come up on my radar as something that's important. I think for Berkshire Hathaway, when the share price is trading at $300,000 for one share, clearly that's not accessible to broad-based investors, and that's why they've got an option to buy a B-class share for a lot less. But at the end of the day, if you think about an example where you've got a business worth $100, you can have one share worth $100, you can have 100 shares worth $1, or you can have 10 shares worth $10. It doesn't matter. The business is still worth the same $100. So it's the same here with Apple, just on a slightly larger scale. Thank you for listening. I hope that was of value to you. Please subscribe to the channel if you haven't already done so. And yeah, we'll see you next week at the next video. Catch ya. Bye.